Good afternoon, everyone. My name is Ayesha Solomon, and I am the Alachua County Property Appraiser. Today, we'll be discussing tangible personal property and why it's important for your business to begin. Before we begin, I would like to go over a few reminders. This webinar will be recorded and subject to later use at the discretion of our office. All questions submitted via Q&A chat must be appropriate. No profanity or disclosure of personal, business, or property information. All questions submitted in the Q&A chat feature will be answered in the order received. However, questions submitted during the registration process will take priority. Now let's begin. Our mission: to proudly provide quality service to our community, ensuring the equitable assessment of properties and exemptions, and adhering to the tax laws and best practices. Tangible personal property. So let's start with what we mean when we say tangible personal property. This refers to everything other than real estate that is used in a business or rental property. This includes any of the following listed on this slide: any goods, chattel, and other equipment or furnishings owned by or used for business purposes. This includes equipment personally owned, fully depreciated, or written off for IRS purposes. For example, if Sky Title Agency reports a chair, computer, a phone, and admits their grandfather's desk that they're using for business purposes, it's going to raise a red flag, and the return isn't going to be complete until you file all equipment and furnishings. If you're not sure what the original cost of your grandfather's desk from the 1950s, then you must put an estimated value and then make a comment in the explanation column of the tangible return. Later in this presentation, we will provide an example of a tangible return for you to view. Tangible personal property exemption. Now that we've reviewed what TPP is, let's take a closer look at the exemption associated with it. A business with TPP assets is required to file an initial return to qualify. Let's break this down. The first $25,000 in assessed value of furniture, fixtures, and equipment is used by a business will be exempt from taxation. Now let's continue to use Sky Title Agency as an example. If Sky Title Agency file a return by April 1st, the assessed value of all the assets combined, if they're less than $25,000, Sky Title Agency will be exempt from taxes. However, you won't know what the assessed value is until you file the tangible return and it's processed by our office. So in 2024, the owner will receive a tax waiver card in the mail instead of a tangible return. The exemption will auto-renew if there are no changes. However, if they replaced a few items, a filing is required in order to update the return with the new assets. If the value is still below $25,000, the business will remain in exempt status. Now, let's suppose that the business relocated and they did a total rebrand and purchased all new equipment. The assessed value increased to $26,000. If Sky Title Agency filed before April 1st, which is very important, they will receive the $25,000 exemption and will only be taxed on the remaining $1,000. Those who are not exempt, fully exempt, must file an annual TPP return. So let's look at some examples. Some of the examples of TPP equipment is computer equipment, security equipment, office equipment, furniture, fixtures, medical, dental, manufacturing equipment, capital leases, signage, and leasehold improvements. Class 94 vehicles registered as a tool and not as transport are tangible personal property. Those are things such as farm equipment like bulldozers, forklifts, and things of that nature. They're also considered tangible personal property. So as you can see from the picture, those were some examples of tangible personal property. Things that business may forget to report are cell phones, office phones. Sometimes they forget their signage, leasehold improvements, and supplies are the most frequently items that business forget to report. Filing overview. Now that we've identified what TPP is and how an exemption works and reviewed the examples, let's take a deeper look into the filing process. Essentially, anyone who owns or has possession of assets on January 1st and is a sole proprietorship, partnership, company, corporation, or is a self-employed agent or a contractor must file each year. Property owners who lease, land, or rent property must also file. Tangible tax returns are due by April 1st. Who are exempt? Places of worship, charitable organizations. However, if applicable, the initial application must be filed by March 1st. So this one is a little different. The TPP return is due by April 1st, but the places of worship, those that are exempt, must file by March 1st. This application will be auto-renewed each year. An assessment cannot be contested unless a return is filed. How can I obtain this form? As a courtesy, the Property Appraiser's Office mails a return at the beginning of each year. If you do not receive one, you may download a return from our website or contact us directly for assistance. How to file your tangible personal property. You can mail the completed return to our office at 515 North Main Street, Suite 200. It's the Josiah T. Walls building. We're in the same building as the Supervisor of Elections, but on the second floor. You can e-file through our website, www.acpafl.org. Go on our website, click the tangible personal property account search, scroll to the bottom and click on TPP e-file, but you must have your account number in order to e-file. You can submit a Excel spreadsheet to our office as well. What we would like for you to do is fill out the first part of the form, the front part of the form, because the tangible return has to be signed and dated. And then you can attach an Excel spreadsheet to the form or send in a USB if you prefer. You can also make an appointment to visit one of our offices in person. Our phone number is 352-374-5230 or visit our website. And we also have a green drop box outside of our office, our Gainesville location. You don't have to come inside if your return is already completed. Just put your return in that drop box. And we also have one right outside of our office. You don't have to come in and stand in line. You can just put it in the drop box right outside of our main office door on the second floor of the building. We do not accept fax or scanned applications because we need the original signature. This is a copy, an example of a TPP return. And this is what I was indicating at first. If you wanted to send in a Excel spreadsheet, you can attach the front part of the form. You have to sign and date this and complete questions 1 through 9 there. I know it's a little fuzzy, but you complete questions 1 through 9 and sign and date it and attach your Excel spreadsheet. There, on the back of the return is an itemized list. It's very important that you itemize the list instead of generalizing it and clumping everything together like office furniture. And your office furniture includes your desk, chairs, computer, and all that stuff in one cost, because it makes it hard for you to break it out in the future if one of your chairs break or anything of that nature. While we're on this page, I wanted to take a look at some of our frequently asked questions. And I'm going to go over some of our frequently asked questions so I can point out and where to go on the tangible return. The first question is, should I report tangible property that is leased, owned, rented, or provided by the landlord? The answer is yes. The section titled Lease, Owned, or Rented Equipment in Schedule 1 of the front page of the return should be used to describe the lease, owned, and rented furniture and equipment. Usually, the property appraisers assess the leasing company for the tax for tangible property. Be aware that leasing companies may invoice you for their liability, their tax liability. Consult with your individual lease or contract for more information. Capital leases should be reported in the same section as leased owned on your depreciation schedule. So you can see on the front part of this tangible return, there's a Schedule 1 for you to report equipment that is leased, owned, or rented by someone else. Now, if you rent or you own the leased equipment, you will fill out Schedule 2 on the front page of this tangible return. Next question is, what if my equipment is in poor condition, idle, or broken? Attach a letter of explanation. Describe the poor, broken, or idle condition of your tangible property. If requested, staff members of tangible department will visit your business location and conduct a physical inspection of poor, broken, or idle tangible property. The next question is, what if I have old or expensed equipment that has been depreciated and written off? The answer is all equipment still in use or in your possession must be reported. Do not remove equipment from the asset list unless it is disposed of. The next question, is there a minimum value that I do not have to report? The answer is no, there is no minimum value. The next question is my mobile home considered real or tangible personal property? The answer is, if you own both land and mobile home, the mobile home must be declared real property and a real property decal must be purchased. If you do not own the land, and do not own the mobile home, you're required to purchase a yearly decal for the mobile home. Next slide is extensions. So a lot of times, unfortunate circumstances happen and you need an extension. All requests must be received prior to April 1st. Please do not send your extension the day of April 1st. It's very important that you submit your extension before April 1st in order to qualify for the 30-day extension. On this form, we need your tangible account number, your business name, and the location. 9 times out of 10, if you submit it before April 1st, you will be granted a 30-day extension. Penalties. This is why filing timely is important. There's a 5% per month, up to 25% for failure to file after the due date. There's a 15% omitted penalty, and you can lose your $25,000 exemption if you don't file timely. So if you need an extension, file an extension. This is also an example of a tangible tax return. Now, a lot of people need the instructions. This is the instructions that comes with the tangible return, the initial filing. So if you're confused about what you need to fill out on the form, in the package, you will have a sample of a tangible return and how to from step-by-step process. Good cause. For good cause to be shown for late filing of returns, there must be no indication or intentional or the intent to evade or illegal avoid payment of unlawful taxes, the property appraiser, or in the case of properties valued by the Department of Revenue. This is what you need to know. Must file initial return by April 1st. We said that over and over again in this presentation. That's so important because if you don't file by April 1st, you will not receive the $25,000 exemption. Assessed value $25,000 or less in prior year are waived from taxes. Waiver cards are mailed by February 1st each year to qualify for accounts. Waiver cards are mailed by an outside agency. We cannot reprint lost cards. Tangible return are confidential information, so only you have access to your account or your itemized list. And if you have someone utilize a CPA, we need a letter of authorization that is signed and dated on an annual basis. Account discussion is only with the authorized agent or owner. Authorization letter must be included yearly with the tangible return. I'm getting ahead of myself. Unsigned returns or unauthorized signature returns are returned to the taxpayer. Late filing penalties may accrue and the possible of loss of the TPP exemption. So I mentioned all of that, and all of this is very important. Tangible personal property timeline. So this is something that you want to mark your calendars for. Date of assessment is January 1st. So as of January 1st, we mail out these returns, and that's what we want to know. What was in your business as of January 1st? Personal property returns are mailed for those who we have on file. April 1st, the filing deadline for personal property returns to avoid any penalties. August, notice of proposed property taxes are mailed. In September, the deadline to file a value adjustment board petition. Remember that before you can file a petition, you have to file a return. In November, you get the love letter from the tax collector. Tax bills are sent by the tax collector. So those are very important dates. Frequently asked questions. I received more than one form. Am I required to file both? Yes, you are required to file both because there's an indication that there's more than one business. If it's not, please let us know. Still fill the return out and a note with it. If I have no assets to report, do I still file a return? Yes, still file your return and indicate why you have no assets to report. There are a lot of times that there's some businesses that maybe a transport business, all they have is a vehicle and they're transporting packages. So that's just an example of a business that may have no assets to report. If I am no longer in business, should I still file the return? Yes, please file a return and let us know that you're no longer in business, and then we will remove you. Who is responsible for filing a tangible personal property return if I buy or sell an existing business during the year? Like we said before, as of January 1st, the person who was in that business as of January 1st is responsible for the tangible personal property taxes. Taxes in our office, it's not prorated. You can go through the title agencies and they do a proration and all of that at the sale of a business, but our office always run by January 1st. So who is there as of January 1st is the easiest way to keep up with that. Helpful tips and suggestions. Number one, it is important to provide a breakdown of assets since depreciation on each item may vary. Number two, file the original return with pre-printed name and account number on or before April 1st. Be sure to sign and date the return. That's very important because it's not illegal, it's a legal document, and if it's not signed and dated, it's an invalid return. Number three, include your estimate of fair market value, date of acquisition, and the original installed cost, including costs such as transportation, installation, startup, and sales tax. Number four, identify any equipment that may have been physically removed. List those items in appropriate space on your return. Number five, use specific terms to describe assets or years purchased. Number six, if you sell your business, go out of business, or move to a new location, file a return with our office. Thank you all. Now we're going to go into, now that concludes our presentation. We're going to go into some of the questions in the Q&A chat. And like we indicated in the beginning, questions submitted in the Q&A chat feature will be answered in the order received. And the question that was submitted during registration will take priority. So let's see how many we can get through. How do we use insurance policies for assets? Insurance policies prove an interest in the property that is insured. The policy also provides a listing of covered property. The next question is, how does property appraisers handle leased equipment or lease to own? Leased property is encumbered by either a capital lease or a true lease. A capital lease provides the capital to buy property. These leases end with the final payment or minimum payment out at less than market value, such as the final payment to ownership is usually $1. The owner of the leased equipment is responsible for the tangible taxes unless there is a written agreement placing the tax burden on the tenant. So review your contract. Who is responsible for tangible tax? The person responsible for paying the taxes on tangible personal property may be determined by the contract between parties. If you do not have a contractual agreement, the owner of the personal property is responsible for the taxes. Next question, do you still tax equipment that is stored in an inactive business? Idle property is subject to assessment. However, because we assess property as value and use, business property may be less valuable when idle for some time. For instance, during the pandemic, a lot of businesses were temporarily closed. This is an example of economic obsolescence, as well as equipment that is placed in a storage unit and not in use. Economic obsolescence, for those of you who, if this is a foreign term, refers to the loss of value that is caused by factors that are external to the property. Such a form of obsolescence is usually incurable, and the owners cannot fix the specific cause of the depreciation. So that's what economic obsolescence is. The next question is, how can this information be applied to the landlord deduction? If the landlord owns the tangible assets, the landlord must complete a tangible return with the assets listed before April 1st to receive the $25,000 tax exemption. If the landlord owns the land, owns the building or the real estate, the law requires that the landlord does not require the landlord to file a tangible personal property return. So if he has no tangible assets, he's not required to file a return. Do home-based businesses need to file? The Florida law requires all businesses to file an initial return. As a new business owner, I do not know where to start. What would be the very first step? So if you're lost, even after this presentation, please call our office. We will be more than happy to explain the process and answer any questions you may have. We can mail you or email you a tangible return. And if you're still confused, you can watch our instructional video on our website. If a business has multiple owners, do both owners have to file? No, one owner must file on behalf of the business. The next question is, when does filing open up? Filing opens up January 1st. The deadline is April 1st. So you have until January, it opens up January 1st. Where can I find my TPP account number? You can look up your business name or address on our website, pull up the account number, or you can contact our office by phone or email. We'll be happy to assist you with this process. Where can I find a step-by-step instructions on how to complete an application? Before January 1st, we mail out a tangible return to all business with the step-by-step instructions included. If you did not receive a return, you can call or email us and we'll mail you a return. The step-by-step instructions is also in a how to file a return video on our website, like I mentioned before, or you can hire a CPA if preferred. What happens if you forget to file or never file? Penalties accrue from 5% to 25% if you forget to file. If you've never filed, an override value would be generated and applied to the account. Your business will be billed based off an average value of a similar business. So let me give you an example. If you are just a small diner, a full service diner, and with minimum equipment, you may be assessed at a value that's equivalent to a Chili's, TGI Fridays, or Longhorn, or something of that nature that's a lot bigger than you are. So it's very important that you do file a return, because the override value may be more than what you actually have in your business. So it's important to file a timely return. So first of all, so you can get the exemption and the proper assessment is applied to your account. At any point you get this override value and you know that it's way more than what you have in your business, file a return as soon as possible. You won't get the exemption, but it may be reduced by it'll be a proper assessment. We will also schedule an inspection with the owner as well. So we'll go out and look at the site, your business. And most importantly, like I said before, you won't receive the 25,000 exemption for late files or if you did not file. What is the tangible tax rate? So it's the millage rate for the taxing jurisdictions, and that varies. So it just depends on where your business is located. Our cabinets, for example, kitchen, shelving attached to the wall, considered TPP or real estate. Cabinets are considered real estate. Filing cabinets is considered tangible personal property. So that looks like that concludes all of our questions. I want to thank everyone for joining us this afternoon. Please feel free to contact our office if you have any questions. Have a wonderful rest of your day.